Hello traders, in this video, I will reveal the profitable strategy that you can use with the RSI indicator. It is a very simple and famous strategy, so the strategy is called the RSI crossover, but most traders are actually trading it the wrong way. The biggest mistake that everyone makes when trading the strategy is every time the RSI oversold, they immediately take a buy position. This is actually the worst way of trading. Let us know how to use this setup. By mastering this strategy, you won't need the other ones anymore. I will go through everything step by step and try to teach you each and every detail. So be sure to watch the till end video. First of all, open the tradingview.com website and then select the GBP/JPY currency pair. I'll set my time to the 5-minute time frame for this strategy. But keep in mind that you can use this method on all time frames and this strategy can be profitable on all of them. I tested this strategy 50 times. You can gain 67% of your account balance in just 30 days. In other words, if you have $1,000 in your account, you can make at least $670 using just one currency pair. The best part of this strategy is you have to risk only 3% per trade. This strategy is based on the trend, price, action, and current momentum. 3 different moving averages work as dynamic support and resistance zones. I will explain this in the video. I will keep things as simple as possible with no complex indicators or tools. So it is very easy to understand and apply. So it is easy to find very profitable trades in a couple of hours. This strategy works very well on the lower time frames like 5-minute and 5 minutes if you are new to scalping trading and still learning about trading. So this simple strategy is a good place to start trading because you will take the decision very quickly and hit buy and sell without thinking about fancy indicators. Now it's time to add indicators to our chart. Go to the indicators menu and search PP signal. Super Smoother Hikonishi. Now go to the indicator setting option and disable some option. Now our first setup is ready. As I already mentioned earlier in the video, we will use this indicator as dynamic support and resistance zones. And if you do not have a laptop or PC, even if you trade with cell phone devices, you can use this strategy to make some money. Before we continue, also, if you're learning something new, hit the like button and subscribe the channel. The first rule is that the price should cross the moving average zone from above to below. This indicates that the current trend is about to change from bullish to bearish. However, this does not exactly confirm the reversal movement. Price may come back to the previous trend. When a large move like this takes place, the price retraces to a higher level 93% of the time. But many times you will see that the market price crosses upwards and then quickly returns back to the zone. Or sometimes a bullish candle closes above the zone and the next candle immediately goes to the zone. These scenarios are valid with our second rule. Our main target is the price hold inside the moving average zone. You need to have a basic knowledge of candlestick patterns to identify the high momentum candles. The main idea is to find a cross down with good momentum so we can identify the momentum that just started and the market will continue in that direction. You can enter the trade here and set your stop loss above the swing high or above red line. The first profit target is 1:1.5, and the second profit target is 1:2. When the first target of profit is hit, you can move up the stop loss, break even and wait for the price to reach the second profit target so it becomes a risk-free trade. You can re-enter the market when you get another pullback in the direction of the trend. But I would recommend you to do only 3 trades in the direction of a single trend and keep low the profit targets low in the second and third trades. Buy rules are completely opposite of the sell rules. First of all, the price should cross above the green moving averages, leaving a gap between the market price and the moving average. The second rule is the price should retrace inside the moving average zone. I explain 3 scenarios that can happen at this moment. First one, the price moves down and goes up immediately, leaving a candlestick shadow. Second, the price is close below the moving average. But the very next candle rejects the price and moves up, printing a bullish candle on the chart. The third one, the price perfectly holds the green line zone and does not cross the lower moving average line. I place the buy trade here. Here our first target profit will be 1:1.5 and the second target profit will be 1:2. Do not set a profit target. Below 1:1.5 and above 1:2. Now, stop loss above the lower moving average line or swing low of the retracement. Even though if the stop loss is too far away, do not enter the trade. Now I'm going to test this strategy on the GBP/USD currency pair. I will take 100 trades and I will calculate the accuracy and gain of this strategy. Okay, the results are in. After 30 days test is truly amazing. So let's check it out. Now, I used a 5-minute time frame. This was done using a 1:1 and 1:2 risks to reward ratio on GBP/USD. And it took 1 month of price data to find the 100 trade signals, which is actually very good. There were 63 winners and 37 losses. The win rate is 63%. This is a really good win rate because our risk-reward ratio is 1:1 and 1:2. The most won in a row was 8, and the most lost in a row is 3. The gain on the account was 82% and that's risking 2% per trade. That means if you had a $1,000 account, you can gain at least $800 profit using only one currency pair. The good thing about this strategy is that you only have to risk 2% on each trade. It is still very profitable if you put in 10 trades. At least 7 trades will be profitable with a 1:1 risk-reward ratios. Don't risk more than 2% per trade, can use more than one currency pair and you can gain more money with this strategy. Now I'm going to improve the accuracy of this indicator. If you want, you can use this indicator alone as well. You have already seen this amazing result. So we will add another new indicator for make better. Okay, now let me teach you how to filter fake signals. We need to add another indicator to our chart. Go to on top of the page, click on the Indicators tab. On the search bar, type Bollinger plus RSI and click on this one. Now this is how the indicator looks. Now add the last indicator to the chart, search RSI plus backlight and click on it. By looking at the RSI Bollinger chart, we can easily understand whether the market is on an uptrend or a downtrend. For example, if I hide this indicator here, then at this position you will not be able to understand properly whether the market is on an uptrend or a downtrend. But if I use this indicator, it can be easily understood that the market is on the uptrend because the market is above the middle line of the Bollinger Band line. But where to execute the trade? For this we will use the first and third indicators. As you can see, according to the first condition, a long signal has been generated here by closing above the green moving average line. And lastly, we will look at the below indicator which should be above the 50 levels. And when this RSI indicator creates a red zone in this way, then you do not have to execute the short trade, you have to hold your long trade because at that time the pressure of the buyer is very high in the market. Due to this, the market goes upwards in exactly the same way we have to execute the sell trade as well. Firstly, the market should be below the middle line of the Bollinger Band indicator. After that the market should close below both the moving averages. Lastly, the RSI line should be at the 50 levels or below the 50 levels, and we will set our stop loss at the previous high of the market, and gradually we will trill stop loss with moving averages. We will book profit when the market moves below the lower Bollinger Band line and then a positive candle is created. As you can see here, the Bollinger Band has just crossed the middle line. So at this point of time we will not execute any trades. So now you can see we have got a perfect sell signal here. So we have made a loss on this trade also. So now let's look at the second indicator. The market price is above the middle Bollinger Band line. So this was a fake signal on which we just executed the trade. You can filter out those fake signals easily using this indicator. Now that we've completely learned this strategy, I want to test it on the Euro USD chart. We achieved nearly 500% profit, and this much profit in such few trades is truly amazing. And one very important thing is when you use this indicator on 1 minute or 5 minute time frame, then your stop loss will be very small. So it may be that the broker you use, they provide you very high spread, due to which your chances of hitting the stop loss will be high. So I would suggest you to use IC Market, which will provide you zero spread, and you will be able to execute pinpoint trades in market. Link in a description. Join now. But if you want to know about another great strategy that is just one, make sure to hit like button and subscribe the channel. See you soon. Thanks for watching our video.